We're down to the final few in terms of coverage on first quarter earnings results. The latest name we're covering currently has their eye on expansion, which has skewed Q1 results slightly for the long-term benefit of the company. We're talking Mako Mining, of course, whom is another small-scale gold and silver producer that is looking to expand their production profile. Their latest acquisition, which involved the purchase of the Moss Mine in Arizona, closed during the course of Q1, impacting some profit metrics in the near term. We'll get into why and how in a minute. Let's dive in. Don't miss the Rural Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the Deep Dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. Mako Mining in the first quarter of 2025 posted top-line revenue of $31.8 million, which was a new record for the company and a substantial improvement from $19.2 million in the first quarter of 2024. That revenue figure follows the sale of 10,800 ounces of gold in Q1 at an average realized price of $29.15 an ounce. Ounces sold were up by 16.7% on a year-over-year basis from 9,300 ounces, while the average realized price of gold ballooned from $20.73 an ounce, a 41% increase. Gross profit for the quarter totaled $16.8 million, as compared to $9.1 million in the year-ago period. After operating expenses and income taxes, net income amounted to $9.4 million, or 12 cents per share in the first quarter, as compared to $5.3 million, or 8 cents per share in the first quarter of 2024, an improvement of 76% year-over-year. EBITDA improved substantially as well, jumping from $8.3 million to $14.4, a 74% increase year-over-year, while adjusted EBITDA climbed to $16.1 million versus $9.2 in the year-ago period. In terms of cash flow, mine operating cash flow totaled $19.9 million, while at the corporate level, net cash provided by operating activities grew from $5.2 million to $6.2 year-over-year. Mako ended the quarter with $10.4 million in cash on the books, down from $14.5 million at the start of the year. The decline, of course, was attributed to the acquisition of the Moss Mine within the quarter, alongside the repurchase of 500,000 common shares at a cost of $1.5 million. Working capital overall improved from $10.8 million to $22.9 million over the course of the quarter. The quarter also notably saw the delivery of 40,500 ounces of silver in relation to the Sailfish Silver Loan, with the final 13,500 ounce installment payment related to the facility subsequently made in March. Let's take a look at the production data next. Mako in the first quarter produced a total of 9,800 ounces of gold, as compared to 9,400 ounces in the year-ago period, an improvement of 4% on a year-over-year basis. Those paying attention will note the Q1 gold sales were about 1,000 ounces higher in Q1 than gold production, with those excess ounces having been derived from production in the fourth quarter. Production in Q1 followed a total of 54,000 tons being milled with average grades of 7.1 grams per ton. Tons milled was up mildly from 52,500 tons in the year-ago period, while grades were down from 7.3 grams per ton. The difference here was made up in the form of recovery rates, with recoveries jumping from 80.5% in Q1 of 2024 to 85.3% in Q1 of 2025, which I gotta say is a substantial improvement. Things, however, got expensive in the first quarter on a per ounce basis. Cash cost per gold ounce sold rose from $858 to $1,239 an ounce, while all-in sustaining costs rose from $1,043 to $1,411 an ounce, which represents a jump of 44% and 35% respectively. The climb was attributed to an increase in the stripping ratio at the Las Conchitas deposit and longer haul distances for the same deposit. But the big impact to costing here was a result of the Moss Mine acquisition, with that purchase including 936 ounces of gold. Rather than label those ounces as free and skewing per ounce metrics to the lower side, Mako recognized the cost as the market price, which skewed costing higher. When we reached out to Mako for specifics, we were told that the moss effect was about $200 an ounce, which certainly results in some skewing. But the effective cost was approximately $3,000 an ounce, less the silver credit. And on the topic of moss, contribution margins from the mine, which is a heap leach operation, are expected to be close to 65%. And since mining isn't actively occurring right now, cash costs aren't reflective of the cost of things here. Costing is expected to be skewed for a bit here too, with mining set to begin again later this month and ramping over a 6-month period. Followers of the space will also recognize the Moss mine as having some historical issues as well. The asset was basically acquired by Mako out of bankruptcy, after all. So we asked what Mako plans to do different here, and this was the response. Moss's issue wasn't metallurgical. It was principally in mining. The rock is very hard, tough to blast. So unless there is complete oversight and control with the blasting and mining contractors, things can get out of control. And it did with Elevation. We operate with direct and detailed oversight of all of our contractors, and we think mining costs can be reduced by approximately 2 tons to 3 tons, which would save close to $18 million per year. All right, so let's wrap it up. Q1 was a strong quarter for Mako, and there's little to complain about here. Sure, costing came in higher than normal, but there's an easy explanation for that. And quite frankly, Mako was being responsible by recognizing those costs the way they did. I'm not convinced other operators would do the same. On top of that, there's a clear growth story laid out here for investors, with Moss about to resume mining, alongside the development project in Guyana. And as with most growth stories, it's now all about execution. All right, everybody, thanks for watching. If there's stories you want us to cover, let me know in the comments section. Also, if you're enjoying our content, do us a favor, smash that like button, subscribe, ring that notification bell. I know that we've got lots of you guys that always comment on our videos, and I don't want you guys to think we take that for granted. Steve from Australia, I see you comment on a lot of our videos. It always warms my heart when I see you comment to our videos. So thank you for watching. And to anybody else who does take the time to say that they appreciate our content, I appreciate your appreciation. All right, everybody. Thanks for watching.